Hi, everybody. Thanks for joining us. I hope you're enjoying Ethereal Summit so far. We're kicking off this next panel entitled Challenges of Operating and Growing a DeFi Platform. There's Felix. Hey, Felix. So we've got a great lineup, great set of DeFi leaders, I think, in this space. Great group of panelists so far. Just by way of introduction, my name is Lyall. I'll be moderating the panel. I work at ConsenSys. I'm a product lead within the Codefi group. Work on a number of different projects. My team is responsible for the DeFi score, which is an open source framework for analyzing risk in DeFi. We recently launched the Inspect product, which is kind of like a dashboard for security and transparency information across the different DeFi protocols. So I'm really excited to kind of kick off this conversation here. Let's start by doing just a quick round of intros. Tell us a little bit about yourself, who you are, the company you represent. Try to keep it around a minute. We can start with Felix. Go for it.
Sounds good. Yeah, thanks for having me. My name is Felix, and I'm the co-founder and CEO of Set Protocol. What we built is an crypto asset management protocol that enables anybody in the world, whether you're a human, an alien, or a robot, to manage any type of asset using any type of asset management strategy. And what we've done is we built token sets, which is the predominant venue in which you can get a set. And we have about 24 traders who are implementing strategies on Set today. So we're continuing to grow, and we're pretty excited to kind of expand the number of strategies that we're offering to offer it to more users and to be able to handle much larger amounts of kind of rebalances.
Got it, great.
Hey guys, I'm Antonio. Thanks. Hey guys, I'm Antonio, the founder of dYdX. dYdX is the leading decentralized platform for margin trading, borrowing, and lending on top of Ethereum. So we've been live on mainnet for about a year now, and we've originated over $1 billion in loan originations. Recently, we announced our move into the derivative space. We're launching a BTC perpetual contract. This is going live very soon and is currently in private alpha testing. And this is basically a way to get synthetic price exposure to Bitcoin. We're really excited about this launch.
Awesome. Hey, Kyle. I don't hear Kyle. Kyle, you're muted.
Hi, I'm Kyle Kistner. I'm co-founder of dYdX. dYdX is a margin lending and trading platform. Some of our products include tokenized margin loans and tokenized margin positions. It can easily be used as a whitelist on trading platforms and other DeFi front ends.
Thanks, Kyle.
Hey guys, I'm Varun. I'm the co-founder of Nuo. So we are essentially a lending and borrowing marketplace. So we were part of the ConsenSys accelerator. I've been live for almost 1.5 years now. So it's been in the space for quite some time. So currently working on the next version of the platform, so moving from just being a lending and borrowing marketplace to more of a financial control center of sorts, so that you basically can manage all your assets and, pretty much everything when it comes to DeFi on one place. So excited to have a chat with you guys.
Great, excited to have you. Yeah, I'm really excited for a couple different reasons to be kind of a part of this conversation. Like you all represent, have founded, are leading kind of key pieces to like the DeFi landscape, key projects in this space. Let's start out by kind of setting up a framework here. How do you guys think about DeFi? Just high level in general. There are many different ways to kind of slice up DeFi, many different terms that are also kind of used. When you think about DeFi and how do you approach it at your organization? Who wants to kick us off?
I can start. So I first heard about Bitcoin in 2013, and I was fascinated because we had this form of money that had all the properties of the internet. It was 24/7, it was global, it was accessible by anybody, and you can send it instantly from one person to another. And that underlying technology, I believe, can be extended to do everything else in kind of the financial and legal world. And you should be able to, once you have the first form of money, which is Bitcoin, you should be able to do other things like lend, borrow, transact, build derivatives, or perform asset management strategies on it. And really, that's what DeFi is. It's the smart it's this ecosystem that's implementing all of this. And I think that it's become quite amazing how this has come to fruition over the course of the past year and a half. So that's really how I see DeFi, and we are building this from a first principles perspective. We're doing it from, instead of building on top of the existing financial world, where you're essentially applying lipstick to a pig, similar, like all the companies like Plaid and PayPal, etc. We're rebuilding everything from scratch. And everybody on this panel is building a small component of that. And what's really powerful is the composability of these different projects to build much more interesting things than had ever existed before. So I think that's how we currently think about DeFi and how we fit in.
That's great. I like how you framed it as almost like just the next step after Bitcoin, after Satoshi. This is just whatever we call it, it's just kind of the next step in the path towards decentralization. This is what it's happened to being called now. Any other insights there on kind of at a high level, how you think about DeFi in general?
Yeah, sure. I mean, actually, from our perspective, we have kind of been fintech founders. So, I mean, we've been in the fintech space for close to around, 5 to 6 years. And frankly, we actually started off, trying to actually create a neobank in India. But the problem was, the banks just didn't have APIs for us to, create something on top of. And that's how kind of we discovered DeFi. And when we started off like 1.5 years back, the term DeFi itself actually kind of didn't exist. We were just attracted to this proposition of, being able to build on something without someone's permission, specifically a bank. And that's what actually got us excited. I mean, the way we kind of have come to think about DeFi now is just basically a progression from, of finance, from probably banking, which is basically driven by banks, to fintech, which is basically, removing middlemen, making it more efficient, reducing branches, to eventually, sort of DeFi is what we define as, essentially fintech 2.0, wherein we basically completely get rid of the middleman and make it as efficient as possible and let the transactions sort of happen and connect peers from around the world. I mean, fintech and banking has always been very local, and DeFi kind of makes it global, completely, peer-to-peer, and that's what kind of gets excited.
Yeah, I think that was a great introduction by Felix and Varun. Just want to piggyback off what both of them had said. My experience personally is through working at Coinbase. And what I worked on at Coinbase was, as an engineer, worked on a lot of the fiat payment integration. So integrating with things like banks, payment processors, PayPal, et cetera. And the thing most people don't realize about Coinbase is probably, I would estimate, like 75% at least of their company effort goes to dealing with the traditional payment side. And a very small proportion of it, in terms of the effort spent on Coinbase's part, is actually integrating directly with the crypto side. It's actually, in a way, a lot easier to build some of these new financial products in DeFi rather than in CeFi, which I think is a really important point. And then just to piggyback off what Felix said, I think DeFi is really kind of the epitome, or kind of the continuation of a lot of the promises that we saw with the introduction of Bitcoin. Like Felix said, with Bitcoin, you have for the first time decentralized money. But kind of what's the point of money if you can't do anything with it? So that's why we had the integration of things like decentralized exchanges, and after that, decentralized lending protocols and decentralized derivatives. I think these are just a continuation of the promises and kind of the reason why a lot of people were excited about crypto in the first place.
So the way that we think about DeFi is we look at it as more of a process and a paradigm than a destination. DeFi companies come into this world looking to get to a certain place. Usually we start out non-custodial, and it graduates to a place where everything is decentralized. And you can kind of think of it as decentralizing the micro level interactions that administrators have to do with the protocol, all the way up into the macro interactions where you're setting general policies, you're upgrading contracts, all of those kind of things. So we see DeFi as being something that is in the process of evolving. And, a lot of people are, thinking about these different terms like open finance, or saying that, DeFi isn't really decentralized. But I think that's kind of like looking at things as a snapshot and not really appreciating the full picture as it's unraveling.
I think that's a great way to think about it. I'm also curious how you guys in your projects individually kind of think about competition. At the end of the day, we're kind of competing over the same users, right? The same liquidity. It's kind of a limited number of DeFi users, at least for now. We're here because we think it's going to grow and expand and disrupt traditional finance. But I'm curious to how you think about competition. Is it really just like we're all in this together, we're competing against traditional finance, or is it truly trying to scrape by and have success for your own project, or you're really trying to compete for the same user? Do you guys have any thoughts on that?
Yeah. I think that like most people's intuition about competition is that it's zero sum. Like if I'm going to win, my competitor needs to lose. But I think if you look at financial markets, if you look at financial history, what you see is that competitors succeed together. If Pepsi stock goes up, it's likely that Coke stock is going to go up. Competitors in financial markets, their assets are very highly correlated with each other. So your success is going to be also your competitor's success, and everybody's executing on everything just in a slightly different way, putting their own spin on it. Some people prefer Pepsi, some people prefer Coke. If you make a product that's really great, people are going to use it and you'll be successful.
Yeah, I can go next on this. I mostly agree with your view. I would say perhaps my viewpoint is not quite as rosy. I think I see a lot of people in DeFi, depending on which company it is, as kind of like frenemies. I completely agree that the best thing for all of us is to grow the size of the market together. Like even if one DeFi product were to take over literally 100% of the current DeFi user base, that's like barely even one venture-backed company. So the really important thing is for all of us to grow the entire size of the market together. And we should really see, the real competitors are people or kind of centralized exchanges or people that are using centralized crypto infrastructure. And how do we start to get people that are using that infrastructure into using DeFi? And the other thing I would say is a lot of DeFi products, probably as it's pretty evident, are very cooperative and not necessarily competitive. So obviously, most of us here rely on other projects, so things like MakerDAO's DAI or different exchanges like Kyber or 0x. So there are a lot of synergies between different things, and I think that makes the ecosystem better as a whole.
Yeah, I think that's right. Kind of the characterization, Antonio, of frenemy. To some extent, I think the most important thing, like you mentioned, is growing the pie together. And the question is, how do we do that? And at the end of the day, it's about building things that are useful for people, and that's really what guides us in terms of like what we do and how we serve folks. At the end of the day, if we're able to build products that are better than that of the traditional financial world or in centralized or DeFi, then we should be able to get more users into this ecosystem. And this is really something where we all win together, where it requires improvements from the base layer, it requires dev infrastructure, it requires liquidity infrastructure, it requires really great composability between all the projects together. So I think when those things happen, then we're going to be able to build really great products that deliver a value proposition that is multiple times improvement than what currently exists. And how I currently see it is that it's really the innovator's dilemma, where you have existing financial products that are maybe this good, but DeFi today is only limited in certain assets. The scalability is this good. Privacy isn't there. Usability isn't there. But the idea is that we can all build together, and our improvement in kind of the value prop and the product will kind of improve exponentially. And at some point, we'll kind of hit parity with existing products and then just be a lot better. And I think that for people who are already in DeFi, they are experiencing that, the lack of friction to getting started and the ease of and transparency of using these products. But I think it's only limited to the 50 to 100,000 people who use it today. So I think our goal in general should be to how do we grow this to the next 10 million, 100 million, billion people. And that's a really long 10 to 20 year journey for all of us. But I think that's why we're doing what we're doing. And I think that's why, despite all these competitive kind of tensions, we're all working towards the same direction.
Yeah, that's
completely agree with Felix and Antonio, man. Actually, I just wanted to add something very quickly. Completely agree with the fact that the real competition is actually with centralized exchanges, and the fact that we are actually creating these financial primitives which are eventually going to compete with centralized exchanges is probably the real competition. Just to add a couple of things here, what we have realized is basically as most of these protocols and platforms create their own versions, the other teams actually get to learn a bunch from the mistakes or the advantages of most of these protocols, that they actually have some sort of innovations, and they get to incorporate that in the next version of protocol. So it's a very cyclical sort of a process, and it's very likely that everyone sort of gets to shine, and everyone will have their opportunity under the sun. It's just that whether you can use that opportunity and grow your platform is probably going to be the key. But that's been our learning essentially. And if you've seen in the last couple of years, 2018 was essentially all about Maker and how you were able to mint DAI. 2019 was about Compound and around lending and borrowing. I think 2020 is very likely to be about margin trading and derivatives, and basically the industry kind of moves in cycles, and basically everyone gets to shine eventually.
Yeah, that's great. I think we all agree that there's this certain period of disruption that's coming, but the reality of the situation as leaders of these DeFi protocols, you have bills to pay and developer salaries to pay. So there's a limited runway, right? Whether it's from investors or from the community that's participated in a token sale. I'd be interested to hear how you measure success in the short term. Are you really, does it come down to cash flow, or is it really just, okay, we're looking at the volume on our platform, we're looking at unique users or total value locked? I'd like to hear more about how you can kind of assess your trajectory or your growth at your project.
Okay, I'll start.
Sure, I can go first. Oh, sorry.
Oh, go ahead.
Okay, thanks, Felix. So I can start on this one. So definitely, I think for us at dYdX, one of the really important things we did recently, about 2 months ago, was we started charging trading fees on the platform. So that was a pretty important watershed moment for us. So before this, we were very much in the grow users, grow trading volume, revenue will come later mode. And we're still very much in that mode. Our business doesn't make sense at a really large venture-backed scale unless we grow in a huge way. So our metric that we mostly look at every day is trading volume. And the reason we look at that metric above all the other ones, including total value locked, number of users, other things like that, is because that's directly proportional to our revenue at dYdX. So very similar to a centralized exchange, we'll just charge taker fees on trades that people make on our platform. And this has been going quite well for us so far. So we just basically look at our revenue and are trying to grow that over time. And this is very similar to how any other venture-backed business will try to scale and try to convince investors that their company is worth something. You basically just take your revenue, take some multiple of that revenue based on the industry you're in and kind of your growth trajectory, and that you can kind of equate to the value of your company. It's a little bit different in DeFi, and I imagine some of my peers will bring up potentially other methods of capturing value, such as tokens or other things. That's something we think about at dYdX as something that could be interesting in the farther future. But our primary focus for now is just on building a product that's actually useful to people. Capturing some value off of that, and the way we're currently doing that is with trading fees.
Yeah, to kind of echo what Antonio is saying, we also very much measure our success in terms of trading fees. We were a Kyber affiliate, and so that was bringing us actual revenue. So cash flow is very important, but we're also interested in what the future of our revenue is going to be as well. So if we see that, our trading volume is increasing, but we're not gaining more users, that's not necessarily success for us. What we want to see is we want to see growth in trading volume driven by user retention and growth in users. So that's like primarily what we're looking at. We want to see how we're doing now, but also where we're heading.
Makes sense. So at SET, we primarily measure ourselves based on how useful our product is and how many users we end up touching in the most abstract form. So the more number of users that are holding sets, the more number of traders who are using sets to implement their strategies, the number of venues you can get a set on, those are things that we measure ultimately our success on and our impact on. But in terms of a business model, we're in a pretty interesting place because in finance, to provide a little bit of context, in finance, there's really two types of business models. There's one, which is exchanges, which make money based on transaction volume. And then there's banks, which make money based on deposits and taking a percentage of that. Exchanges such as FTX, Coinbase, these derivative exchange products, they're mostly measured on volume. But then you have other products like compound lending products or asset management products that are more based on AUM, and you typically charge a percentage of that. So for SET, in the near term, we see ourselves more as an exchange, maybe something like an eToro where we're taking a percentage of rebalance volume. But in the longer term, we see that there could be billions or trillions of dollars locked in these assets, don't necessarily rebalance that frequently, and we may become more of an AUM or kind of depository-based business. So asset management is a little bit tricky in that sense.
Gotcha.
For us, actually, so basically one of the things that we have clearly seen, especially in the crypto space over the last, 5 to 7 years, is companies who are actually in crypto, it's actually, they're very profitable. Be it, Coinbase, or, you probably just heard about Cash App being, making tons of money with Bitcoin. So monetizing a crypto product and, making revenue and being profitable in a crypto sort of product is extremely easy, frankly, because it's basically money moving around. And, there are speculators and people who are, used to actually paying certain amount of fee. So, at least the way we think about it is essentially we have to, grow users and grow AUM, at least in the short term. Our focus currently is essentially around how we can actually get to the first 100,000 or the first 200,000 users, and what essentially do the kind of innovation that you need in terms of the product, so that it can be as seamless as possible. It's almost like, you'll be using a Binance or a Coinbase, and how can we give that kind of an experience to users so that we can get those sort of users on board. And in general, what we've realized is, given our presence in India and essentially in Asia, majority of our users are essentially coming from there, and we want to be sort of the center pillar for DeFi when it comes to Asia and how we can actually grow users in Asia. And that's the focus for us going forward.
Great. Yeah, that's really good. I'd love to hear a little bit more about the challenges of operating where most of your users are in India. It looks like you have some sunlight, so I can't imagine you're in India. Or is it really just good lighting in your situation, Varun?
It's just good lighting.
Really
yeah, absolutely. Yeah, so up pretty late, man. It's 11:30 here, still in India.
Oh, okay. Yeah, thanks. What time is it for you?
It's almost 12 o'clock, man.
Great. Well, we appreciate you staying up and joining us. I'd love to hear more about specifically India and the challenges that you're facing. I know that it feels like you're pretty plugged in, just based on following you on Twitter, that you're pretty plugged into not just the blockchain scene, but just like maybe the startup and software scene in India. Love to hear maybe a little bit more. From my perspective, it kind of feels like India is kind of softening or loosening their stance or their regulatory kind of view on crypto in general. Is that true?
Oh, definitely. So, I mean, we just like a few months back, we had a very landmark judgment from the Supreme Court here, wherein it actually, the bill which was sort of the circular which was passed by the central bank was kind of squashed down by the Supreme Court, and the on ramps have kind of opened up. The new circular hasn't come from the central bank as to how these crypto companies and crypto exchanges can actually on ramp, but things are looking pretty good over the next 3 to 6 months, and hopefully there's going to be a ton of volume which is going to come from India. Usually, what happens specifically when it comes to India is that people you can expect a lot of users to come in, but not enough volume. So US or most of the developed markets is where majority of the volume comes in. But if you want your DAUs and MAUs to kind of skyrocket, that's when you actually look towards India to kind of grow that. So I mean, super excited about what's the potential of that going to be like, especially when it comes to DeFi. I think what's going to be very likely is that more and more people are going to be initially attracted to Bitcoin, and eventually transition to DeFi because the sort of sentiment around digital gold and that kind of sort of narrative fits well into what the investment mindset of Indians is around gold in general. So I think that's likely to be the clear progression there.
Yeah, that's great to hear. That makes sense. Let's shift gears a little bit here. The way I see it, one of the core properties of DeFi is permissionless, right? As a user, I don't need anyone's permission to go to this protocol and lend my assets, right? On the other side of the coin, that there's just as much permissionlessness on the developer side and the product builder side. We're living in a time where anyone with an internet connection and a GitHub account can create open source software, deploy a contract, in no time begin pooling liquidity. And we've seen examples just in the past few months where brand new protocols, smart contracts, millions of dollars get rushed into these projects and these smart contracts before an audit has even taken place. I'd like to pose this question of how do we encourage this, right? How do we encourage innovation, risk taking, and development, trying things out, experimenting, but at the same time, having the user experience and security and safety in mind? How do we encourage innovation but keep our users safe? Any thoughts? Kyle, you're kind of nodding. What do you think?
In terms of keeping our users safe, yeah, there's definitely quite a few projects where people have the capability and the capacity to build something that people actually care about, but the tech is sort of running in front of the traction from the community and the funding from the community, and you end up in situations where there's hundreds of thousands of dollars, and you haven't had hundreds of thousands of dollars of audits already done on the contract. And that's a fundamental that's a financial barrier that a lot of projects are dealing with. I've heard ideas from I think it was the Ethereum Foundation about sponsoring audits for different protocols. I don't think as a community that it's a terrible idea to say, hey, if we have a product that's gaining a bunch of traction, it's getting a whole bunch of users and money, and we don't feel like it had all the audits that would make us as a community feel comfortable, I don't think it'd be a bad idea to start thinking about coordinating it, because in some sense, one project gets hurt, it affects all of DeFi, it affects all of Ethereum. So we all kind of have a stake in it in a way.
Interesting.
So I just thought of a new idea. Similar to how we have the notion of progressive decentralization, I think that there should be the notion also of progressive security, where the more funds you have locked, the more that you're on a mainnet environment, the higher the security requirement should be. For example, when you first develop some code and you deploy onto Kovan, there's no real money that is being interacted with, and thus you can have bugs in your system and things will be okay. The intention is to just test the system out. And our next environment that we use is what we call staging mainnet, which is a test version of our smart contracts that's deployed on mainnet. And we test it. And that also isn't intended to have a lot of real money flow through it. So we can test quickly and iterate quickly using this environment. And then finally, we have kind of our mainnet environment in which the smart contracts are holding tens of millions of dollars. And like how we think about that is that that should be very secure. It should have had not only internal audits, but external audits on the security side. But we also need to make strict validations about kind of the types of risks and third-party dependencies that we're using. And we think that the strictness of kind of the security needs to scale according to how much dollars are kind of flowing through your system. So if your system only has $1,000 or $10,000 or $100,000, it may not require like a full-on audit on day one. But if you're dealing with millions of dollars, then you might expect to have a more formalized audit. And then if you're maybe in the $50 million range, like some people might want you to have formally verified your contracts or built your contracts in a way where it can be formally verified. So in addition to that, I think that certain scales, like you might want to start employing economic audits, like what Compound did with Gauntlet. So I think, and I think the idea is that as you're able to get more users and get more traction, you should be able to raise additional resources from investors to kind of pay for these audits over time. But in the early days, you might want to do something, move quicker to find product market fit first, and then kind of double down on security afterwards.
Yeah, so I'm going to take a little bit of the other side of this debate, if you will. I think right now DeFi is in a very similar place to how centralized exchanges were, call it like 3 or 4 or 5 years ago, where a lot of the projects or some of the projects in the space are currently getting hacked. Things like LendF, like where a lot of funds were lost, they eventually got it back through centralized mechanisms. But I think there really needs to be a consolidation towards some of the products that have proven themselves to be more secure. And I think that until users realize that security is a really big consideration that they need to take into account when they're choosing which product to use, that these attacks will continue to happen. It's not so. I think a lot of people in the space have take like lending as an example. I think a lot of projects in this space will promote like just various let's only compare lending products by the APRs that they're offering, but different products do not have the same risk parameters. Like dYdX, for example, has a lower collateralization ratio than Compound does, so probably lending is a little bit more risky for that reason. Or there may be certain security considerations to take into account when you're considering different products to use. And I think users really need to be aware of that. And there need to be more kind of third-party rankings of what is the security of actually using this product before users are really able to make an informed decision on which ones they want to use.
Great. At the risk of shilling my own product, I would encourage everyone to check out the DeFi score, where we try to do some of that. It's really an open source project where we're trying to kind of crowdsource risk and do it in a decentralized way. It's kind of like a ratings agency on the blockchain. So great. I think those are all really, really cool ideas. And we're really, like we said, in the early days of building these products, let alone assessing risk. Varun, I'm being told that your chair swivel, the producers are telling me that your chair swivel is causing some squeaking on the audio. Oh. So mute yourself if you're not talking. Live conferencing in effect here. It's hard to police those things. If we say, okay, under a certain level, you need this kind of audit. Once you hit this level, get this kind of audit. It's really tough. I mean, it's almost like we don't want user growth at the moment, right? Until we get our stuff together. Where in the stack, like if you think about, a lot of you guys are building protocols, and then at the same time, it's also the user interface. Others of you have like a separate product that acts as the destination for the user, the interface. Like one last kind of chat on security, like who's responsible? Who in the stack is responsible for saying, hey, user, watch your funds, you will lose money? Is it really on the front end and saying, hey, this slippage is really bad? or is it the whole point of this DeFi experiment to just let it run? Like, who ultimately is responsible for educating the user regarding these risks?
Yeah, maybe I can go first on this so you guys can have a chance to respond. But just piggybacking off of what I said before, I think in a very similar way to how centralized exchanges evolved, I don't think any one person is responsible. I think basically how it will evolve is certain DeFi products will become more reputable. So a lot of it comes down to reputation. Like, this product, say like Compound, for example, has been live on the mainnet and it has like whatever it has, like $150 million locked, and like it hasn't lost any user funds. So that's like a really great sign. So because of that, I'm going to trust Compound with my money because they have a great track record of building like secure smart contracts that don't get hacked. And I think right now we're in the process of, various DeFi products trying to build up that reputation for themselves. Sometimes, someone will have like an issue happen, like MakerDAO, when some of their CDPs became under collateralized due to an auction issue. Not to say that like destroyed their reputation, but certainly it impacted it. So now certain people are, they would take that into account when they're thinking about using DAI. So I think it's a lot of like reputation based, very similar to how the centralized exchanges work. So like Coinbase, as an example, has a great reputation for taking security extremely seriously, like always putting security first, never having lost any user funds or anything like that. So a lot of people will weight that as a reason why they might use Coinbase as an exchange. They don't know what like audits Coinbase has done or like other things like that. But they do trust that Coinbase has security in mind first, and that they've done all the best things and taken all the best practices to keep user funds safe. And I think a very similar thing has to happen for DeFi.
Yeah, I agree with Antonio. I think that reputation and ultimately brand like makes a big difference. And I think that's what's going to happen in practice in probably the short and medium term. In the long term, we're probably going to see similar things to kind of what we have in a traditional financial world, which is regulations. Like when bad things happen, the government starts stepping in and imposing new rules, which is why whenever you go on an exchange or you look at a financial product, there's a ton of disclaimers. It's a reason why you have to say, this is a disclaimer that I'm not giving investment advice whenever you're saying something on Twitter. So I think part of the answer is that we all need to be vigilant across the stack to kind of explain to the best of our ability what the risks are. And there's many, many, many different types of risks. And I think that we should create some sort of standard for communicating this risk and and we should probably have some sort of central repository to kind of understand what these risks are. And that's why I really like what DeFi Score is doing, because it's attempting to do that. But I think that we have a long way to go across the stack to do that for everybody. And I mean, part of it is that we can, as an industry, police ourselves, or if we're unable to do that, then some sort of other regulatory body, whether it's some governance or some country, may decide to kind of impart certain regulations to force us to do these things in the future.
Great.
Yeah. So kind of piggyback off of what Felix was saying. So to piggyback off of what Felix was saying, I think, this whole question of reputation, reputation is really great when you have a low amount of information and you're not able to analyze the primary source. But I think the way the space is going to go is towards third parties vetting these different protocols and providing that kind of primary analysis. So I think things like DeFi Score are going to become invaluable and have a sort of dialectical relationship with reputation, where the underlying facts of the protocols and the security parameters get relayed to people and therefore come to inform their apprehension of the different protocols. And then more towards what you were originally asking about, whose responsibility is user funds and the safety of user funds. I think the answer to that question hinges a lot on what exactly is our purpose? What is our intention? What are we trying to achieve? And if we're trying to achieve mainstream adoption, if we're trying to get people widely using DeFi, then the answer to it has to be that it's us as the protocol. If there's any time that we could have done something that would have prevented user funds, we can't come out and say, hey, well, you should have known the risks we need to come and say, hey, you know, we can do X, Y, and Z to make this better and not happen in the future. And so I don't really fully understand where people are coming from or where they are trying to move the space when they try to heavily emphasize, hey, you know, if you lost your money right here, you didn't understand the risk and that's your fault. And don't blame us. I don't understand where does that take us?
Definitely, man. I think one of the what we'll probably add is apart from just security, one of the big aspects around DeFi, which is probably less talked about because the entire focus is around decentralization, is basically around legality. And the two approaches that currently which are out there, which is essentially being a protocol so that you can focus on your security, you can be completely audited, you can secure user funds, but also try to wash away your hands from legality. And because you don't have control over your protocol, potentially you can't be be deemed a money lender or a sort of a payment service of sorts, and you let other folks build on top of you who have the responsibility of getting themselves legalized in different jurisdictions. So this is essentially sort of a dilemma for DeFi in general, and that's why a lot of folks actually prefer to go the protocol approach, because legality is a very complicated aspect of it as well. We don't know whether you can actually have mainstream adoption when you are focusing on as a protocol on security and user funds and expecting somebody else to figure out the tough part of actually acquiring users for you, and you're giving away all the liquidity to the protocol. So basically that pushes down the incentive for this sort of free layer to go and acquire customers if all the liquidity is going to the main protocol. So it's actually a tough thing, and I think that's probably one of the reasons why DeFi might not go mainstream anytime soon, unless and until someone comes and takes the responsibility of trying to be full stack and saying that we are going to acquire the user, we are going to be sort of we are going to go and do the dirty work of talking to the regulators and see how this can be adopted in a mainstream way, and also take care of security. So I think that is a kind of approach that might be needed to take sort of DeFi mainstream. Probably not what is happening in terms of DeFi Legos.
Interesting. So I think, I get a sense that like we can, from the perspective of a protocol, we can make sure all of our contracts are audited. But it's almost like with all the composability, all it takes is just DAI breaking its peg and everyone's screwed, right? Like it almost feels like this is Maker's world and we're all just living in it. Do you agree with that statement? What's going to happen with your protocol if, say, DAI falls to 60 cents or something like that? What do you guys think about that? Do you think about that?
Yeah, I guess there's two scenarios. Like if DAI just like has a security vulnerability, let's say as an example, and like all of it is gone and it like falls to zero in like a second, then like, okay, probably some of the lending protocols wouldn't be able to deal with that. But if it's kind of a more gradual thing where for some reason over time DAI is losing its peg, I think most, in my understanding, lending protocols would be able to handle that, and kind of their oracles would be able to adjust to that in a reasonable amount of time. You're absolutely right. There is additional security risk which comes with composability. So I think it's not just like a free thing where, money Legos is like amazing and it has led to a lot of really interesting things being built. And I think I'll just take probably the other side of this argument as well. This is why at dYdX, we've chosen to build things in a more full stack way versus kind of integrating with other third-party solutions. As an example, like at dYdX, we used to integrate with 0x and OasisDEX to do our trading. And recently we've kind of brought that in-house and have kind of built our own markets. And there are a couple of reasons we did this. One of them was for security, though that's honestly mostly a minor concern. But just when you become a more mature product, you basically want to have more control over the things that you're building on. And we kind of have the bandwidth to be able to build, we built something similar to like 0x that integrates natively with our contracts. And we felt that would enable us to have a better product experience, enable us to build more liquidity. And it actually has. So I think this is a really good example of how like over time, a lot of projects will start out with using these DeFi money Legos and having a lot of composability. But if they're seeing success, we'll start to bring some of these things in-house.
Awesome. Yeah, so we're short on time. I'd like to wrap with just just quickly, short, one phrase or one sentence answer, maybe a bold prediction, whether that's total value locked next year, some kind of wild speculation. What's something that's kind of counterintuitive or half crazy that you predict in the next couple of years? We'll start with you, Felix, and then go around.
Well, some other people have said that SET will be the first $1 billion TVL protocol. I don't think that will be the case. I think some others may achieve that first. But from my perspective, I mean, in the next few years, maybe not crazy, but I think that DeFi will grow way faster than anybody thinks. Like, we may hit $1 trillion in volume and assets locked in kind of the next 3 years or so.
Love that. Antonio, what do you think?
I'm going to shill a little bit, but I think most of you guys will agree with me given what you're building. I think DeFi margin trading and perpetuals will pretty quickly surpass the DeFi spot market. And the reason I think this is because we saw this happen with centralized cryptocurrency exchanges, where for the beginning, centralized spot markets were dominant, and now it's all centralized derivatives and margin markets. And I think the same thing will happen in DeFi.
Awesome. Kyle, your bold prediction.
I mean, I agree with Antonio's bold prediction. Let's up Felix's prediction. 2 trillion. All right, let's double.
Varun, what do you think?
I would probably take sort of the pessimistic side, at least in the short term. I'm not too confident that DeFi would be ready to go mainstream over the next couple of years. There are a lot of issues with regards to insurance and safety of user funds. So I think we would probably be stuck with speculators and traders and folks on TVL in the short term, and not so much on going mainstream at least.
Great. Well, thanks everybody. Appreciate your time. That's all the time we have today. Thanks for joining us. Take care.
Thank you.
Bye, everyone.